the 17th Thursday in 2022, believe it or not. And I thought I'd put this in the front end instead of the back end. So in case you wanted to know how I claim authority to do this and be an expert, you can see it right here up front. What's in the program this week? 6 items, and it was an interesting week. We got an IRS audit that denied a taxpayer's S corporation losses. I was talking with Bradley Burnett. He thought that was interesting. And then I picked up an article written by 5 bright young professionals who are in the business of underwriting tax insurance. You can buy insurance for a return position. They think the minimum amount is probably about $5 million, but all the way up to $1 billion if you want to pay for the insurance. A rental loss is denied. These taxpayers are not real estate professionals. They make a common mistake. I want to make sure that we go over that so that everyone understands exactly what the requirements are to be a real estate professional and allowing you to deduct rental losses in spite of the passive activity loss limitation rules. Good food, but poor tax compliance. The IRS wants returns and tax payments from Archie's Waffles, or whatever the name of this thing. They sell waffles and chicken, which maybe that's a Southern tradition. I never thought about combining waffles and chicken. I've eaten cold waffles, I've eaten cold chicken, but I never thought about having them for either breakfast or lunch, but you'll straighten me out. Someone will send in, we'll get mail on that one. Exempt organization returns are due May 16th, gang. Just when you thought it was all over and you took a deep breath, all those 990s, 990Ts, 990Fs, they're all due May 16th unless you ask for that automatic 6-month extension. And finally, a surprise. Really hard to sort this one out. The tax court 30-day filing deadline on an appeal from a levy is subject to equitable tolling. That is, if the IRS assessed you a penalty and you had a hearing and you didn't like the results of the hearing, you had 30 days to appeal. In this case, a law firm was 1 day late because of extenuating circumstances, which would be equitable tolling. The Supreme Court said the 30-day deadline imposed by the tax court on appeals from a levy are not subject to the 30-day rule. That is, the tax court can't do that. That's got all the commentators, all people that do what I do around the country are all buzzing. The phone lines are hot. They were sending messages back and forth about this Supreme Court decision, which blesses equitable tolling in one very narrow area, which is the appeal from the assessment of tax and levy. Well, I get excited about talking about some of this stuff, but let's go. S corporation losses are denied, had a couple of big words in there. Taxpayers failed to provide cogent evidence. What's cogent mean? Something that is convincing or believable, okay? They failed to provide evidence that was convincing or believable that their S corporation's gross receipts were overstated in one tax year. And they failed to show the S corporation and the husband had sufficient. What does that mean here? Adequate for the purpose, enough, being what is necessary. So they failed to show the S corporation and the husband had adequate, enough, being what is necessary basis to claim losses from a partnership they had formed that was a TEFRA partnership for the sole reason it had an S corporation as a partner. QuickBooks records somehow were mysteriously destroyed for 2 years, but they hired a CPA who reconstructed the records. Now away to the courthouse we go. Todd Kohout. In Findings of Fact, Judge Courtney Jones explains that bank deposits analysis and records of disbursements were not as reliable as original books of entry. Now, we've heard that from judges before. So this new tax court judge is simply explaining things the way other tax court judges have explained them. Substantial amounts were transferred among several bank accounts. Oh, here we go. Moving money between the bank, and it wasn't no small amounts. And we're talking about $178,000, $250,000 here, there, everywhere. summaries and lists that were prepared by the CPA after the fact were not contemporaneous records. Contemporaneous records are generally thought of as more reliable than those that are reconstructed. And Judge Jones made that point. Next, by the way, if there are questions, please submit the questions. They'll show up here in somewhere, I think on the top of my screen, there's a chat function. Or you want to put questions in the chat function? We can have a conversation about this stuff. You don't have to just sit and listen to me talk for half an hour. I wouldn't want to do that either, now that I think about it. Tax notes today. This is an article. You'll find the last name of the lead author, Lash, if you're going to look for this. These five, one moment, please. Something has gone wrong in the studio.
Went on to gain 1,000% or higher. And today, Pat is coming forward to address the general public again.
Working from home is not as, you can't always control the environment. Let's put it that way. I'm sure some of you know that. These bright young people in a really new part of our profession get together to explain the factors that they look at when determining what policy terms to offer to a taxpayer who wants to buy insurance for a tax position. Obviously, they outline the benefits of tax insurance because that's the business they're in. And they explain the process for obtaining insurance and tell us what common policy provisions are available. Let's review that. There is a mask. I think that's a Maori warrior mask from New Zealand. That's about as fierce as you can get. Each tax risk is unique. That mask represents risk. So underwriters are going to consider the uniqueness of each risk. They're going to consider the quality of advice from the taxpayer's own counsel. They're going to consider procedural posture and risk of detection. If they're going to insure your tax position, they might want to think about whether or not it's likely to be detected. If they think it won't be detected and there won't be an argument, the insurance is going to be cheaper. Positions in connection with newsworthy events or IRS audit initiatives are going to be more expensive. So what is the context and the motivation for insuring a tax return position anyway? Traditionally, it's only been for mergers and acquisitions, and it's only been the big accounting firms and the big law firms and that knew about this. It was, I guess, a closely guarded secret. I thought I had a pretty good practice. I didn't know about tax insurance until a couple of months ago. It is expanding to comfort ordinary taxpayers. Why? It's about 2 years old, really. So why now? Well, we're getting into foreign risks. The IRS has been more active in some areas. We have concerns about listed transactions, and the IRS might list a transaction after you've engaged in it, and then you have a limited period of time to fill out all the forms and get right. So there are areas where in a contemporary practice, I would think about buying insurance for a return position that involved a risk of more than $5 million. That's about the low end of the threat, because it's going to cost money. The terms and the provisions, I summarize those here on this slide. I guess I'll go kind of slow. You all can read this quicker than I can read it to you. Typically 7 years, 6 years is the statute of limitations, plus 1 year, just in case we miscounted, which is always a risk with me. I mean, I couldn't even get the time right today, right? Limit of liability, practical low of 5 million, but can go up into the billions. Retention, which is a fancy word for deductible, and it might only apply to the litigation costs. Depending on the terms of the policy can pay the costs of defending the position, or you can agree to pay the cost of defending the position. Obviously, the insurance is going to be cheaper if you pay the costs of litigation. The premium and the underwriting fee, it looks like the minimum is about $60,000, which gets back to the practical low of $5 million for the insurance. It's going to be a function of risk, liability limits. It'll be a function of the insurance markets. Covered loss can include the tax, the interest, the penalties, and even the litigation costs. The standard exclusions that'll nullify your insurance: fraud, omission, a materially inaccurate statement by the insured, a return position that's inconsistent with what you insured. If you told them one thing and you did something else, you don't have any insurance. And if you settle with the IRS without the insurer's consent, you can hardly expect them to step up and write a check. And then, of course, the law changes. That's something we deal with all the time. The Taxpayers Council, your lawyer, your CPA, will lead all the litigation. If you lose, you're going to be required to appeal. And once you lose at appeal, then the insurance will pay. So what are the benefits? Well, there's that alligator, which I think probably represents our view of the Internal Revenue Service. It takes the place of an uncertain tax liability. You can quantify the insurance premium. You know what it is, how much it is, and you know that it's spent. It's a sunk cost, and you factor it into the transaction. How do you get the insurance? 5 steps. Contact the broker. It takes about 2 days. The broker is going to help you prepare your application. It takes about 5 days. The broker will review the application with you. 2 days. So now we're 5, 7, we're 9 days in. Formal underwriting. The broker is now going to take this to the insurance companies, and they have their own people who evaluate the risk and the reliability of the broker, right? And so you got 5 to 7 days. So now we're 9, we're 16 days. We're going to be 2 weeks from the day you decide to seek tax insurance until the day a policy can be written. Why is this important? If you're seeking tax insurance in connection with a transaction, you're buying a business, or you're selling a business, or you're merging 2 businesses, how long is 2 weeks? It can be an eternity. Trying to keep the parties together, they've agreed on some small things. There's some egos involved. Let's get this deal signed while everybody is in the mood to sign it. Don't let it blow up because we're waiting on the insurance underwriter to get back to us to ensure the transaction. Now, the requirements to be a real estate professional. I live in Florida. Half the people I meet here are real estate agents. It seems to be a popular profession. Or they're in the real estate business. They own rental properties. What does it take to be a real estate professional and deduct losses from the operation of rental properties without being concerned about the passive activity loss limitation rules? You got to be an individual filing a Form 1040. You could be a partnership in some circumstances. You could be a single member LLC, for example, and that's a disregarded entity. Now, in order to be a real estate professional, either the husband or the wife individually must meet both of these 2 requirements. And it's a common misunderstanding that as long as the husband and the wife together have 750 hours, they're okay. It's not true. Either the husband or the wife must have at least 750 hours performing services in a real estate activity, and those are clearly articulated in the guidance. And you got to spend more than half the time spent in any activity for the production of income. It's got to be in a real estate activity. And either the husband or the wife has to qualify alone. Now, once they've done that, then the filing in the joint return can be of real estate professionals, and the property can be owned in joint ownership. That's not a problem. But Christian Sezanoff and his wife were not real estate professionals. IRS disallowed their claimed losses. They didn't maintain contemporaneous records. Here we go again of the hours they worked on their Florida rental properties, but they reconstructed it. We got nowhere with that. The reconstructed time logs were essentially disregarded. But even at that, they had 800 hours together, but neither of them had more than 450 hours. They misunderstood the basic rule for a real estate professional. Now, busy in the kitchen, too busy to file tax returns and way too busy to pay the tax. They were involved in a lawsuit. They were involved they were sued by an employee. They lost the lawsuit. They had an insolvency issue. They filed for Chapter 11 reorganization. They forgot to file tax returns and pay tax. I don't know how they managed to survive in a Chapter 11 filing where you're under the court supervision without filing returns and paying tax. But okay, I didn't dig into the facts that deep. Parent corporation wants a redetermination of tax deficiencies. The IRS erred in determining various adjustments. I'll tell you how they erred. The revenue agent was rude. The revenue agent refused to consider the special circumstances that kept the chief executive officer and cook for Roscoe's House of Chicken from attending these crazy meetings to talk about a tax audit. So the revenue agent just wrote up the assessment, disallowed all the expenses, just really nailed them. Taxpayer didn't appear for the audit. That is possibly a misunderstanding. And the IRS dealt harshly with the taxpayer, and the court is probably, this is a petition filed, this is not a decision, the court is probably going to give this taxpayer another swing of the bat, another bite of the apple, another chance with another auditor. May 16th filing deadline. Some of those are mandated to be electronic, folks. Don't miss that. Deadline before extension for the 990 series, the 990N, the 990T, and the 4720s, all of them. As a matter of reasonable practice management, I suggest that you request the automatic extensions. Don't make yourself crazy. Enjoy June. Go out on a boat on the 4th of July. And then get excited in the fall when it starts to rain again and the weather gets difficult. Mandatory electronic filing, I mentioned that a moment ago. 990, 990EZ, 990PF, 990T for calendar year 2021. That's the one, the deadline is May 16th. You must file those electronically. Private foundations filing a 4720 must also file the form electronically. Charities and other tax-exempt organizations can file the forms electronically through the IRS authorized, through any IRS authorized e-file provider, which might be you, and organizations that are eligible to submit a 990N, that's the postcard, must do so electronically. They can submit it through the IRS, through a utility on www.irs.gov. Pre-recorded online workshops. We all have clients that get involved in tax-exempt organizations, the local YMCA, the Red Feather Campaign, the United Fund, something to benefit veterans, some special fund for Ukrainian relief. To help them comply with filing requirements. They all have a good heart, they all want to do good, and they mess things up, right? That, if you download the material, that blue online workshops is a link. And you can go to the series of pre-recorded workshops, the IRS calls them. They are simple instructions for anyone that is going to be an officer, a board member, or even a volunteer working with the money, the finances of a tax-exempt organization. It's so much better, and you can help them stay out of trouble, right? The work that you do on the front end may be ever so much more important than the work that you might do on the back end of these things. Need an extension? Form 8868. Nichols doesn't bring you a problem without bringing you a solution. There's the form. It's automatic. But if you think that the tax-exempt organization may have a tax liability, maybe there's a 990T involved, or should be, there's unrelated business taxable income, you got to pay the tax. You can extend the administrative difficulty of preparing and filing a return, but you need to pay the tax. And the IRS encourages you to file your 8868 electronically. Now, I see names, faithful friends here have been with me most of these programs. Why, given everything you know about what the IRS is doing, how they're operating, do you think that we just absolutely should file electronically if we can? Do you read the same things I read? That the IRS is 6 months behind opening the mail? Wait a minute. I told you last week, I have a client that got behind filing their returns at the worst possible time. We filed returns for 2 years on October the 14th, 2021. November the 16th or 17th, 2021, the IRS signed for the certified mail. We haven't heard anything about it since. And it's substantial refunds, and the client's getting impatient. And they say, but there's no one I can call. Well, there's someone I could call. I could wait on the phone for 2 hours, and then they would tell me I shouldn't have called. So if you can file electronically, for goodness sake, file electronically. Don't overburden an agency that's already taxed to the max. Now about this tax court filing deadline. This generated a lot of interest when the Supreme Court says that a filing deadline is subject to extension based on extenuating circumstances. Equitable tolling. Beckler, law firm out in North Dakota or South Dakota, out in the West somewhere, they sought a tax court review of an IRS determination and assessing tax, and then they went to a collection due process hearing, and the hearing officer said, no, you don't get any more time. Here's a levy. Here's notice of a levy. We're going to execute the levy. Beckler had 30 days, according to the tax court rules, to file an appeal. This particular liability is under section 6330D1, and it's one of those places where we need to make sure we're in the right pew. We're looking at the right code section. It's 6330D1, the 30-day deadline there, right? It's not absolute. The tax court dismissed the petition for lack of jurisdiction. They could read the code, says 30 days, 30 days, 30 days. Tax court said the 30-day deadline was jurisdictional and not subject to equitable tolling. Well, wait a second. You know me, I'm a dumb Irish farm kid. I look this stuff up. What does jurisdictional mean in the first place? What does equitable tolling mean? A statute prescribing a period of limitation for the bringing of certain kinds of action. What is this appeal about? Right to a hearing before filing a levy only. The section 6330D1 that I mentioned, this is the tax court statute of limitations. So I need some definitions. The Supreme Court has said the 30-day rule is flexible if the taxpayer has a good story to tell. Equitable tolling is a principle of law that says a statute shall not bar a claim in cases where the plaintiff, the party, despite being careful, doing everything they could could not or did not discover the injury until after the expiration of the limitations period, in this case, 1 day. Equitable tolling. The Beckler law firm is entitled to equitable tolling, no matter what else we have to decide. What is jurisdictional? So when the time limit is not statutory, it may be subject to equitable tolling. And I got confused here because when I went to that code section, at the end of it, it says 30 days. But the 30 days was not an absolute statutory limit, it turns out. The tax court had no power to establish an arbitrary 30-day limit when no such limit was contained in the statute. So a limitation can be statutory, in which case it's out of everybody's hands, or it can be jurisdictional, in which case, if it's jurisdictional, then it's going to be subject to equitable tolling. If your deadline is based on what you think, then the taxpayer can take advantage of, the taxpayer can get the benefit of unique circumstances. But this isn't going to happen every day. And not every taxpayer is going to be interested in it, and you may not care either until and unless your client is facing a levy. And somehow between you and the client, you file your appeal 1 day late. In that case, you're really going to be interested in this, and you're going to be scratching through. I mean, Nichols said something about this 6 months ago or last year. Find that tax to the max. I want to hear it. I want to see it. Well, gang, that's it. I really apologize for being late. My computer, as you hear all the noise and all the stuff going on, I'm totally out of control with the technology today. I do so appreciate your friendship and your support. I would say keep the cards and letters coming, but there haven't been any. Please free. And Marcia, thank you for your questions. We'll get that work done here. Every week, we're going to feature current information about developments in administration and interpretation of the tax law. You got a question? I will do my very best to help. If you want me to answer privately, I'm always happy to do that. If you think it's something to be of interest to everyone, tell me, and we'll make a headline out of it. Thanks again.